Most people treat investing like gambling. I did too, unknowingly, until I learned 3 rules that saved me and 3 principles that turn my savings into wealth. In this episode, we will deal with the difference between money and wealth. Money is a medium of exchange and a measure of value, while wealth is the total resources and assets that provide well-being and security. You see, the rules that saved me taught me that difference, and I consider those rules and the principles that followed them part of that wealth. That is how the wealth and the wisdom ambitions work together. 2 ambitions combining forces to turn your money and knowledge into wealth for years to come. But before we go into it, please like and subscribe and send us your questions. Let us help each other. The 3 rules that saved me. Rule number 1, never buy what you don't understand. Rule number 2, don't confuse price with value. Rule number 3, protect the downside first. Those rules stopped me from blowing up my money. But here's where wisdom kicks in. Component number 1, start early. Compound interest is the closest thing we have to financial magic. Component number 2, diversify. Spread your bets, cushion the shocks. Component number 3, stay long-term, ignore fear and greed. Follow your plan. That's how your savings stop being a gamble and become true investments. And your money, month by month, becomes wealth. The 3 principles that made me an investor. When people ask me about investing, they expect a secret portfolio, a shortcut to riches. But every financial expert worth listening to will tell you the same thing. Before you invest a dime, get the basics right. Start early if you can. Time is your most loyal ally. Pay off your toxic debts, especially credit cards. And build an emergency fund so a car repair or a busted water heater doesn't knock you flat. Without that foundation, investing is like building a house on sand. But once the ground is firm, that's when the real journey begins. And on my journey, I discovered 3 rules that saved me from financial disaster. But here's the twist. Over time, those rules matured into something deeper. 3 guiding pillars, almost like wisdom whispering into the ear of ambition, that transformed my savings from gambles into true investments. Rule number 1, never invest in what you don't understand. Back in the dot-com days, a buddy pitched me on a next big thing stock. The charts looked like a rocket. The hype was deafening. But I had no clue what the company actually did. I stopped myself with rule number 1. If I can't explain how this business makes money in plain English, I have no business owning it. That one rule saved me from a parade of disasters, shady startups, overhyped crypto coins, and more guaranteed winners than I care to count. Rule number 2, don't confuse price with value. I once bought a stock because it had fallen 70%. It's cheap, I thought. Wrong. It was on its way to bankruptcy. That day I learned, price is just a number on a screen. Value is what you actually get for your money. Don't mix them up. Investing isn't about chasing bargains or shiny charts. It's about owning something worthwhile and holding it long enough to let it work for you. Rule number 3, protect the downside first. In my 30s, I thought I was invincible. I was swinging for home runs. Then a market downturn wiped out half my portfolio. That's when I learned the painful truth. Great investors care less about how much they can make and more about how much they could lose. Protecting the downside means diversifying. It means never betting money you can't afford to lose. It means boring, safe assets sitting alongside the exciting ones. And above all, it means patience. Because if you protect the downside, the upside usually takes care of itself. A brief pause for green tea, and a reminder to please give us a like and subscribe. Now let's dive back in. Wisdom ambition enters the scene. Those 3 rules: understand what you own, respect value over price, and protect the downside, were my survival kit. They stopped me from blowing up my savings. But as the years went by, I realized something else. Surviving isn't the same as thriving. That's when a new layer of wisdom emerged. Call it the adult voice in the room. These 3 pillars of investing philosophy matured out of those rules. They're what transformed me from a nervous speculator into a steady investor. Pillar number 1, start early and harness compound interest. At some point, I realized that investing wasn't about winning a sprint. It was about running a marathon. Every expert, from Warren Buffett to your neighborhood financial advisor, says the same thing: start early. Because compound interest is the closest thing we have to financial magic. The earlier you start, the less you need to put in. A 25-year-old who invests modestly every month can end up ahead of a 35-year-old who invests twice as much. Time is the multiplier. For me, this was the antidote to greed. When you respect compounding, you stop chasing quick wins. You let time do the heavy lifting. Pillar number 2, diversify to manage risk. Rule number 3 taught me to protect the downside. Diversification is how you actually do it. Every professional investor will tell you, spread your bets across industries, across countries, across asset classes. Because no matter how smart you think you are, the world is unpredictable. When tech is down, bonds may be steady. When the U.S. stumbles, emerging markets might surprise. Diversification cushions the shocks. And here's the wisdom part. It doesn't just protect your portfolio, it protects your mind. Because when one part of your portfolio is bleeding, but the others are holding up, you're less tempted to panic. And avoiding panic is half the game. Pillar number 3, focus on long-term goals. Avoid emotional decisions. The final piece is the hardest. Don't let your emotions run the show. Markets soar and greed whispers, buy more. Markets crash and fear screams, sell everything. If you follow those voices, you're toast. Experts say behavior often matters more than market timing. Automation helps. Dollar cost averaging, automatic contributions. Writing down your plan helps too. What you'll do when markets rise. What you'll do when they fall. For me, this principle was about maturity. It turned investing from a casino into a plan. I stopped checking prices every hour. I stopped bragging when things went up and despairing when they went down. I tied my investing to my life goals, retirement, security, freedom, not the daily ticker. That's the wisdom ambition intervening on the wealth ambition. It's what stopped me from treating my savings like lottery tickets and turned them into a foundation for freedom. The middle path portfolio. So here's how I see it now. The 3 rules saved me from disaster. The 3 pillars gave me a strategy to build wealth steadily, without losing my head. They're like 2 stages of growing up. First, don't hurt yourself. Then build something that lasts. And that leads us to the middle path portfolio. It's my way of putting these lessons together into one simple framework. Balance, steady, neither reckless nor timid. But we're not there yet. First things first, if you're still carrying debt, or if you don't have an emergency fund, focus on that. Because the middle path only works when your foundation is solid. In our next wealth episode, I'll break down exactly what the middle path portfolio looks like and how you can adapt it for your own journey. So remember this, if you only take one thing away today, let it be this. Investing is not about chasing jackpots. It's about starting early, spreading your risk, and staying calm for the long haul. That's how your money stops being a gamble and becomes wealth. So here's my challenge to you. Take a quiet moment tonight. Grab a notebook or your phone and write down where you stand. Do you have debt to clear first? Is your emergency fund ready? Are you investing already or still waiting for the perfect time? Be honest with yourself. Because building wealth isn't about comparing your chapter 2 with someone else's chapter 20. It's about taking the next right step from where you are. And if this episode struck a chord, if you're tired of gambling and ready to invest with clarity, then stay with me. Because in the next wealth episode, we're going to get into the middle path portfolio. That's where all these rules and principles come together into one simple, balanced plan. So subscribe, drop a comment with the rule or principle that hit home for you, and share this with someone you know who's chasing quick wins. Maybe you'll save them the pain I went through. Remember, Wealth isn't built on luck. It's built on patience, wisdom, and time. And the best time to start? Well, that's now. See you next week.